Hi, everyone. Hi, Juan. I'm glad you're here speaking to you today. How are you? We're here because you have some great news to share with our audience, right?
Yeah, I'm here. I'm very, very happy to talk to my dear colleague Alicia. She's always a great asset, and she's doing great work for us in terms of explaining Darwinex much better than we have been to date. And I'm also happy as a cricket because we've given birth to a baby elephant that we have been grooming for the last 18 months. And that elephant is we have finally now received permission by the Spanish authority to carry a full scope MiFID license as an asset manager and broker in Europe. And yeah, this has been a big thing, which took a lot of effort, but it's also quite reassuring in the sense that we have now had two regulators who have checked us from the inside out, all the way from the shareholders that back us, their capital base, our internal processes, our business model, our personnel, the whole lot. I mean, we've basically gone to the doctor and been checked out for everything, and we've come out squeaky clean, the way we always have. And I think this should be a very reassuring thing for our users because, you know, very few companies go through the same degree of scrutiny that we go through by being regulated by two of the highest, the most, how shall I say this, demanding regulatory regimes in the world. So that's kind of my first feeling is of being very proud. My second feeling is actually feeling very grateful because, and many of our long-standing users know this, we have been hit by something which was completely outside our control, which is Brexit. Back in the day, we went for what we think was the highest standard in terms of regulation. We went to the FCA precisely because of that, because we also have global ambitions. And then Brexit happened, which meant that our biggest market, which is the European Economic Area, we didn't have the permission to operate there. Operate meaning we could, of course, take on clients who came to us on a reverse solicitation basis. And this was great because we have always relied on word of mouth in our community to bring in new clients. We have never been an active marketer, but nonetheless, the few things that we did, we had to stop. So podcasts were hard to promote in the European Union. Even payment methods were giving us sorrow because they thought we were operating without a license. I mean, it's just been a difficult time, and it took us way too long to receive the authorization, given that, well, anyways, it's just been a bureaucratic nightmare, which is finally over. And we're very happy to now be able to service our clients in just the same way that we had been doing since 2014, all the way until Brexit.
And that's great. So you mentioned already a couple of things that it was, you know, not having this European regulation was blocking Darwinex to actually do things in Europe. What other things? I mean, what it means for Darwinex?
Let me just stop there. I mean, I think that the biggest concern is that it's not like we've never really done stuff that we couldn't continue doing because we've never been very active in marketing. But the one thing which was concerning us was that long-standing users feared for what was going on. I mean, why are these guys, why is it taking them so long to have this regulation? Is there some sort of issue with capital? Well, of course there isn't. We mentioned we raised 3 million euros this time last year. So there's never been any shortage of capital. There's never been any issues with us whatsoever. It's just that it's taken long, and then that breeds uncertainty, and it was an issue for clients, which I can totally understand, and I'm very grateful for them to hang in with us for all this time.
Yeah. So what's coming next now with the EU regulation? What's in Darwinex plate for the future?
I mean, there's a downside and the upside. So the downside is all the time we've invested into essentially duplicating our entire back office and administrative framework. That's basically meant opening up accounts with all the payment providers, preparing our backend systems to handle more than one entity, which in itself is an investment in the sense that once you do 2, you can do 15. But we had to do the effort of duplicating all that, which means a lot of resources that would have otherwise gone into improving the product have gone into improving what you don't see under the hood. So what that means going forward is we are going to get all those resources back to be able to do what we want to do, which is offer clients a better product. And there's lots of things on their way that we're going to be releasing over the next months, some of which I'll hint at later in this podcast. But what it means is we're back to business as usual. And thank you very much, David Cameron, for making us waste all this time. I mean, that's really what it means. Yeah.
Now with the EU regulation, are you exploring to expand or to focus in any particular territory with this new weapon? I mean, what are the plans in terms of?
So we have had, I mean, in terms of client jurisdictions, our biggest single market is Spain, where we do about 30% of our turnover, and the 80%, including Spain, of our turnover is in Europe. And Germany is a quite big market for us, as is France, and also Italy. What this means is we're now ramping up using the capital we've raised to build up our sales force and start to bring what we know is a winning product, because otherwise it wouldn't be so popular in Spain, to these big markets where we think there's bound to be very good traders, and also there's a large investor base looking for good talent, particularly now that the market has turned in the equity side, but there's volatility that traders do very well out of.
Okay. Any other plans or updates, news after this EU regulation that you want to mention? Maybe that is not 100% related, but you want to give the audience some hint.
Yeah, so if there's one thing that we've learned over the last 5 years, is that regulation is a very heavy burden, which we welcome. I mean, it's a burden we welcome in the sense that the most important thing is to reassure clients that we're doing things by the book, and that's very, very important. However, my personal take is the regulatory pendulum has swung too far with some guys, meaning us who are regulated are being subjected to more and more and more scrutiny. But this, I also have to say, as an entrepreneur, I feel there's a lot of people doing whatever they want offshore, and there's nowhere near as much resources devoted to, kicking those guys out than there is to supervising the guys who are already playing by the rules. That's been the first point. Now, because of that, there's been a number of things, a number of changes to the regulation itself, where basically the bad guys went offshore and the good guys were handicapped vis-a-vis those guys. And then came Brexit, right? And then from our standpoint, we are a fintech company with the aspiration of funding, getting good managers and getting them investors and delivering that good. We appreciate there's permissions that one requires for that, meaning the asset management permissions and so on. But the whole brokerage thing is just something which has gone way too far. It's just, it's getting to a point where it doesn't bring all that much value to us. I mean, of course, it does bring a lot of value in the sense that we can control the entire experience for our end users, but we are thinking of more and more ways to bring the technology that we offer, delivering the same value to our users without having to go through this enormous regulatory burden, which means we can't really devote our resources to what we're best at. So what does that mean in practice? So our interactive brokers relationship that we're working on is one where we will become an introducing broker to interactive brokers, and we will make our platform available to any users who already have a client relationship with interactive brokers. But we will no longer hold these guys' money. meaning we will no longer be their broker, because we know the moment we go into exchange traded assets, there's no real benefit from the standpoint of our end user for trading through Darwinex or trading through Interactive Brokers, at least from the trading part. Of course, the customer service is a very important thing, which means, for instance, in this case, the Interactive Brokers relationship, we are going to be the only counterparty to speak to our clients. We're going to support them in the very same way that we've done so far on the CFD sides, which we will continue to do on the CFD side, but there will not be the worry of I have to open a new account with a new broker where I already have an Interactive Brokers account, or, and this happens a lot because we are growing, we have seen more and larger clients trust us, and account sizes, 6-digit account sizes and even 7-digit account sizes are, I'm not going to say 90% of our revenue, but certainly they make up a much bigger chunk than they did a number of years ago. And if I was in these clients' shoes, I would feel more comfortable with a 20 billion valued company than with a healthy startup with plenty of cash in the bank and 65 employees, but nonetheless, we're not Interactive Brokers, let's face it, or we're not Interactive Brokers yet, let's face it. So we're thinking of ways to basically say regulation or opening new accounts with a new broker should not be a friction into joining the Darwinex ecosystem, which was always about prove what you've got and we'll get you the investors. So that's the point one. And then secondly, we're looking at ways in which we can pivot our business model towards a platform as a service or software as a service, where we will still primarily rely on our asset management regulation, but the being a broker will not be a conditio sine qua non. So, of course, we will remain a broker. This is important for us to service our investors. Of course, it's important to offer very good CFDs by being able to control our liquidity. But I think we've had a bit enough of this regulatory overslapping, and we're looking at ways to make our business model, to adjust our business model to what has always been our vision. What that means, for instance, in practice is that by just getting and introducing broker license or an asset management license is a lot easier than carrying a brokerage license where you take on clients' monies. So as we think of going into Asia or going into the US, we will not want to be the broker in the US, and we will most likely not want to be the broker in Asia. We'd much rather partner up with the likes of Interactive Brokers so that anybody who's got an Interactive Brokers account can connect this seamlessly to Darwinex and become part of the ecosystem. So, to sum up all of this, is what's coming next is
it's big.
Of course, sorry?
It's big and promising what's coming next.
It is big, but above all, it's back to our core. If we offer futures or equities trading, it's going to an exchange. It's essentially a question of which price people are paying, but there's not going to be different execution if you go with one broker or you go with the other, which means we don't really bring a lot of value by being a middleman between the trader and the market. And in that way, it brings us back to our roots of being a fintech in the asset management space that offers a meritocratic platform for people with talent to hook up with investor capital.
And just, coming back to the regulatory point, do you feel like people, traders, are conscious about these regulatory burdens and what it means for a broker to be regulated by a truly robust entity like FCA or the Spanish regulator? Do you feel like, there is, they are educated?
I think it's hard to generalize. What I can say, though, is that, it's a bit like age, right? When you're younger, you just don't know what you're doing and you just go for it. And as you grow, there's risks, right? So when it comes to brokers, you probably see some sort of advertising by some sort of CFD broker on some sort of t-shirt, and then you go to their website and they say, oh, you can trade with low leverage with our European regulated entity, or we've got this fantastic offshore entity and you can trade 500 to 1 leverage, right? So the first time you do that, you go, oh great, I get 500 to 1 leverage, right? Once you've seen brokers blow up, you go, oh my God, if they're offering me 500 to 1 leverage, it means that they're offering some other guy also 500 to 1 leverage, and this thing is going to blow up at some point. And that's when you start thinking, okay, I want to go to some place where there's third-party verification and the proper controls, so that if I make money, the last thing I want is for the broker not to pay out. So I would say the larger the accounts, well, the longer one's been in the market and the more capital one is risking, the more attention one should devote to reading the small print. And from our standpoint, we've always wanted to be on the safe side. I mean, we've got investors who've been CEOs of banks and so on. So we just, we don't really cut any corners there. And I hope as people learn that they value that, which I think they do. I mean, like our business thrives on recurring customers, which means we want people who come in, trade for the long run, and stay for the long run because they know they're in the best hands. I mean, actually, if there's one positive thing to take away from this whole Brexit thing, is the reassurance we've had that our long-standing customers have continued to do business with us and have even further continued to refer new clients to us who have actually come to us, even though in this case we were on the wrong side of the rules, in the sense that we didn't really have a permission to actively market in the European Union. So yeah, I think one builds a reputation over the years, and one has to do what one has to do to keep that reputation. We've done it. We've now spent a lot of time, a lot of money, and a lot of development resources into getting a second regulator to regulate us all the time. We've paid our dues, but I think this is, as always, a foundation for the future, and therefore it was worth doing.
So, Juan, I think it's a relief that Darwinex has now this EU regulation. Congratulations, because from now on, as you said, Darwinex can focus their efforts on doing what it has to do, like expanding services and offer and so on. So I don't know if you have any other comment just to close this podcast, or
well, I mean, yeah, there's only one, and that is thank you to all our users. We literally wouldn't be here without you, and you've held our hands at a difficult time, because from our standpoint, it was very difficult to prove that there was nothing wrong with us. The only thing that was, the only problem here has been I was going to say, I was just going to say another word, but it's been an unproductive, bureaucratic process that has created a lot of uncertainty for both us and our clients, where there was no need for it. But now it's over. So let's get back to business, and let's continue to grow the talent pool, and let's continue to grow the assets under management, which, by the way, are growing very substantially, as they always should, because of the performance of the best managers in the platform. So, the past is the past. We've now got the foundations. Let's onwards and upwards.
Of course, always looking at the future, and which is very promising. So I hope we can speak very soon, Juan, with more updates about what you mentioned in this podcast. We will indeed. We will. And well, to all our audience, just thank you also from Darwinex, and see you next time. Bye, Juan. Nice speaking to you as always.
Thank you. Bye.